2012. My name is Daryl Guppy and I'm involved in technical trading of the markets. And 2012 is going to be even more challenging than 2011. Let's have a quick look at it. We've got the Eurozone in collapse. It's a dead certainty that Greece will default on its debt. The question is exactly when and how that default will take place. What will be the impact on the euro dollar? How is this going to impact on the euro across the board, and how is that going to cross flow across the currencies? The key factor we're looking for going into 2012 is a massive increase in volatility. The volatility we saw in 2011 will be repeated in 2012. How do you make money? That becomes the key question in 2012, how to recognise volatility, how to trade volatility, and how to trade it effectively. Because if we go to the stock market, then look at the S&P. The S&P had a negative 1% return. If you bought at the beginning of 2011 and sold at the end of 2011, you actually lost money. And that's before you counted in brokerages, commissions, trading costs, etc. Maybe you take a long-term view. If you bought at the beginning of 2010 and sold at the end of 2011 on the S&P 500, you were struggling to make 10%. 10% over 2 years, your money can do better elsewhere. So that's the challenge in 2012. How do we recognise the volatility? How do we trade these developing trends, these developing short-term trends? How do we trade them effectively? Because the key change has taken place since the financial crisis, since 2008, is first of all, trend instability. Trends are more unstable than they used to be. Then we have a change in trend durability. Trends continue for less time and they collapse much more rapidly. That means that if you make a mistake and you're caught on the wrong side of the trade, you can surrender all your profits and a great deal of your capital unless you develop the techniques to identify the end of the trend quickly and the discipline to be able to trade effectively. Now, in our upcoming workshop for Monex, we're going to explain how we look at trends, how we identify trend breakouts both on the downside and on the upside, how we can apply that to currency trading, how we apply that to FX, how we apply that to commodities, how we can take advantage of the move of oil above 100 with an upside target towards 110 plus. How do we identify when that rally is taking place, when that rally is sustainable, and when that rally ends? How do we know to be on the correct side of the trade, on the right side of the trend? They're the sorts of things that I'll be talking about in a couple of weeks' time. I look forward to seeing you there.